Hello, everybody. Joseph Smith with Travel Tax here. Today is March 15th, 2021. Last week, the big COVID legislation was passed and signed by President Biden, and it contains a number of tax gems, as well as some things that make you wonder how in the world they're going to pay for all of this. But there are both retroactive changes as well as changes going forward. So buckle up. I'm going to try to go through these really quickly. And of course, if you need any further explanation, feel free to email us at info@traveltax.com. Keeping in mind, this is our busiest time of the year. So we may be a little slow in answering those questions, but there are a lot of good things here to talk about. Let's talk about the retroactive changes and changes that we really want to focus on immediately. Number one, unemployment compensation. The bill retroactively exempts unemployment compensation of up to $10,200 per person for the 2020 tax year. That's the tax returns we're filing right now. Some people have already filed, and we have another video we just put out on how our clients handle that and how we're handling and a roadmap of what they should expect coming in the future. But this goes backward and says if you receive unemployment compensation of up to $10,200, it is free of tax. The federal government, the IRS, treats it as taxable income. A number of states just ignore it, but there are a handful of states that tax it. So here's the dilemma that we now have. Now that the federal government is not taxing it, what are the states going to do? In the coming weeks, we have two challenges going on as we serve our clients and the nation as a whole. Number one, all of the software programs, all the tax software programs now have to retool to incorporate some sort of exemption of the unemployment compensation. The second thing is we have to wait for these states to decide. So some returns are going to have to be held up for a while we await the state legislatures to make up their decision. This is another reason a lot of people are going to need to file extensions. Second provision is that if you received a premium credit for health insurance that you got through the government exchange, and you had to pay those back because your income was higher than expected, for 2020, that payback, clawback, recapture, whatever word you want to put on it, is exempted. And I know I have had a couple of clients already this year that had to pay back over $9,000 in their credits. This is huge. So if you had to get health insurance because your job situation was uncertain, but then later on got a good job, you're not going to be penalized for being able to find that job and getting that health insurance while you need it. Now, for both the unemployment compensation and the health insurance, again, we're having to wait for the IRS to give guidance of how we, say, amend these returns or how we handle the states as well. Another reason for filing an extension. Now, the other provision that this has is we now have a third stimulus. And this stimulus is $1,400. If you remember back, there was a lot of talk about a $2,000 stimulus, and on the second round, only $600 was issued. This is a way to make up for that difference so that the total between the two becomes $2,000. Now, this is very similar to the credits or the stimuluses that we already had, the $1,200 and the $600. The $1,200 and $600 were 2020 tax credits paid in advance. That when we file this year, we're reconciling what we got with what we should have got. This new credit of $1,400 is a 2021 credit paid in advance. And the first thing that they're looking at is the 2020 return. If they do not see a 2020 return, they're going back to 2019. Now, this stimulus is reduced once your income as a single goes above $75,000 or as a married couple above $150,000. So let's paint the picture of something that you may want to be aware of and you may need to file an extension. If your income in 2020 is higher than your income in 2019. And it's high enough to reduce or eliminate your stimulus, you don't want to file until you get the stimulus. What do you want to do then? You file an extension and you wait till you get that stimulus. So what it forces it to do is when the IRS computers throw to the tax returns, they don't see one in 2020, so they go back to the one in 2019. The one, if it has lower income, is going to give you a better qualifying opportunity. So another reason to file extensions. If you need to file an extension, we just put out another video that will help you in that regard. All right, those are the three big ones that have happened immediately. Now, the other one, and I have to sort of refer to my cheat sheet here. If you have children, or if you're going to have a child this year, the tax credit for that child is now risen. That tax credit is now $3,000 per child, up to age 17. And if your child is less than 6, meaning 5 and under by December 31st, your credit is $3,600. But there's another twist to this. You're not going to have to wait till you file your tax return for 2021 to get this. Starting in July 1st, half of this credit is going to be issued on a monthly basis. So that means if they get a $3,000 credit because your child's, say, 10 years old, you're going to get $1,500 divided by 6 for the next 6 months as an advanced payment. And then when you do your 2021 return, you're going to get the rest of it or reconcile what you may not have gotten. Same thing for the $3,600 credit as well. This is big. This is huge. Going on from this, let's say you have these children and you are now using daycare, dependent care. And I have always said, get involved in one of those dependent care benefit programs, especially if your work allows it. That's one of those little savings accounts where they take your wages and salary, set some of it aside so you can pay tax-free for your child care. In the past, the limitation has been $5,000, now $5,250. But for this year, it is now raised to $10,500. And for some clients who have expensive daycare situations, this is going to be a huge tax saver. So take advantage of this. Talk to your HR department or your payroll department or whoever you have this opportunity to work with. Now, another big thing that we need to focus on. You have student loan debt that you're getting ready to have forgiven? Well, good news. Normally, when you have debt forgiveness, it is income. The idea is, well, you got all of this benefit from having this loan. You purchased things, you got services, you got cash, whatever, and now you're being forgiven to where you're only having to pay back this much. The difference there is called an accession of wealth, and accession of wealth is taxable. So normally, if you get your credit card forgiven or anything like that, that becomes taxable income. Now, for all student loans forgiven between 2020 and 2026, you are exempted from that additional income. Just like the principal residence exemption that came out during the last big recession when the values of the homes plummeted. They were forgiven of the debt on their principal residence. Same idea working here. You get forgiven for your debt for your student loans. Then, we've already talked about the healthcare credits, and for those that are receiving earned income credit, when you file in 2021, you now have the option of using either the 2021 income or going back to 2019. A lot of things there. There's a few other ones, but they're not worth talking about here because they involve businesses or something like that. But if you want more information, go to our website or email us at info@traveltax.com, keeping in mind that this is tax season, right? And my buddy that helps me with my taxes or stares at me the whole time while I'm taking care of tax returns would agree. Don't expect us to reply in 1 hour. It's going to be more like a couple of days because it's really busy this time of the year, especially with all these retroactive changes. So let us know if you have any questions or if you have any other further comments, and enjoy these provisions while they last. Have a great evening.